Good afternoon. Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. It is another day of earnings. We have earnings expectations for tomorrow, as well as one of them, Advanced Auto Parts, actually reports earnings today. But I also have some news to break to you about the Russia-Ukraine situation and how the markets are being impacted. So make sure you're sticking around for that. But first, before I get into anything else, I want to shout out my starting five. Bodie Beard, what's up, my man? Kevin Hawthorne, Savvy Money Show, Pastor David Hopper, and Snookeroo. You guys are my starting five. If you did not make the starting five, could be because you're not subscribed to this channel or hitting that notification bell. So make sure you're doing that. I certainly would appreciate it. Show up early, and you just might get the shout out for my starting five. So guys, looking at the markets right now, and they're still quite green, not as green as they were before, but the green nevertheless. The S&P is up 1%, 42 points. The Dow is up 80 points. NASDAQ is up 165. That's good for 1.5%. And the Russell's also up over 1.5%. Pretty interesting day so far on the reaction to the Russian missiles that crossed into Poland. We're going to be talking about that in just a sec. Also wanted to highlight Bitcoin sitting here at 16,800. That's up 485 points or 3%. And then WTI crude, I feel like I skipped over that. I don't know what happened to WTI crude. Where's it? There it is. It's at 86.65 a barrel. So here's what happened. You guys ready for this? Here we go. Russian missiles crossed into Poland, killing two U.S. officials. Killing two. Let me start that over. Russian missiles crossed into Poland, killing two, according to a U.S. official. So here's the news. Russia had earlier on Tuesday pounded Ukraine energy facilities with its biggest barrage of missiles yet, striking targets from east to west and causing widespread blackouts. This is according to Market Watch. Russian missile. It was Russia's biggest barrage yet, and some of the missiles crossed into Poland, where two people were killed, according to a U.S. official. It marked the first time in the war that Russian weapons have come down onto NATO country. Polish government spokesman Mueller did not immediately confirm the information from a U.S. senior intelligence official who spoke on the condition of anonymity because of the sensitive nature of the situation. But Mueller said top leaders were holding an emergency meeting to a crisis situation. Polish media reported that two people died Tuesday after a projectile. You can see this here. Projectile struck an area where grain was drying in a Polish village near the border with Ukraine. NBC News later reported that through official channels, the U.S. was unable to confirm the exact nature of the incident and was awaiting specifics from Warsaw. Now, I'm not one to put my tinfoil hat on all the time, but if I were to do that, I would say that this is quite a distraction, considering that we just got done learning about the SBF dealings in Ukraine and how money was laundered. Or perhaps that the SEC, Gary Gensler of the SEC, was also kind of in bed with SBF or what have you. Can't be a coincidence, right? Nevertheless, the markets were responded to it briefly. I'll say that. They responded to it briefly. And I wanted to kind of show you the cues right now. So here's the NASDAQ 100. It did react initially, but then actually ended up starting to recover just fine. For those of you who are wondering if this is going to impact the markets, to me personally, I don't know if there is anything to necessarily be concerned about in the here and now. I'm not saying that we should ignore it, but I'm also saying that I think that it wouldn't make a whole lot of sense to overreact either. So for those of you who might be worried about your investments or whatever, I don't think that there's necessarily huge cause for concern right now, but just make sure you keep it on your radar. As always, we always talk about, managing risk and that sort of thing, but the markets seem to be briefly reacting, and then everything's kind of getting bought back up. We're heading into the close right now. We're seeing a little bit of a sell-off. Don Fran pops in and says, panic. Yeah, everybody lose their mind. The sky is falling. But to me, I just don't see how this is. Look, we see this all the time. There's collateral damage at times. The U.S. has done it. Other countries have done it. You hit targets you don't mean to hit. It happens. Russia is no stranger to this either. I just think that should be pointed out. I'm not saying one way or the other whether this was intentional, whether it was not. And as I pointed out, putting my tinfoil hat on, there are things that you could probably try to speculate on, but at the end of the day, it's also all just speculation. How are you going to prepare for this moving forward? We've talked about this on this channel before back in February when all this had happened. And I had mentioned that Lockheed Martin and some of the defense companies were worth taking a look at. LMT has had an amazing year as a result. And if you guys weren't subscribed to this channel then or haven't been since then, there you have it. Lockheed Martin has been on absolute fire since we talked about it back in February. Back in February, when I had mentioned looking at Lockheed Martin, it was at $248 a share. It's now at $466. So if you want to take a play, you want to manage some risk, you want to find a trade that has to do with this, look no further than something like a Lockheed Martin or a Regeneron or whatever. So I think that these are going to be good ones. The defensive type plays are ones that we always tend to look to. And obviously it's been doing really damn good ever since. The war machine wages on, guys. So let me know what you guys think in the comments about this one. Love to hear from you guys. But to me, I think that there's definitely cause for concern. We shouldn't ignore it, but I think we also shouldn't overreact to it either. Just stay the course. All right. So I see some other people chiming in. What's up? Brandon in the house. What's up? Data Lord. Cinestyle says, I sold this morning on PPI personally and shorted and got lucky as hell. Yeah, you did get lucky as hell. You're lucky that Russia had a bit of a misfire. The PPI numbers, actually, I didn't think were all that bad. But let's see. RTX. Did I say Regeneron? RTX, yes, is the Raytheon is what I meant to say, not Regeneron. Raytheon is the company. There we go. Let's take a look at that stock. Also been on absolute fire since February. It's so funny, right? You can see exactly when this is when Russia. Oh, no, I'm sorry. This is 2020. Let's take a look at this. This is when the Russian invasion happened. Let's go back to 22. This is your weekly chart here. And there it is. Actually, Raytheon's actually in the red. Lockheed Martin isn't, though. It's on absolute fire. But there you have it. Okay. Let's take a look at some stocks that are reporting earnings today. Raytheon's still moving, by the way. It's up almost 3% here, about 5 minutes into the close. Let's go back to the 5-minute chart. You can see that's had a hell of a move. You can tell exactly when this announcement took place. I'm sure if Don from the Don Fran show was on here, he probably would make some sort of technical analysis as to why this actually moved up. But this is also the news moving the stock as well. So very, very interesting move on Raytheon. Okay. And Lockheed Martin. Let's actually, I bet you it looks almost identical to what Raytheon's doing right now. There's the move. Actually, a little bit more of a sell-off for Lockheed Martin on the daily, but not bad. Who makes the Javelin? I think it is Lockheed Martin. I think it's Lockheed Martin. Okay. So we have earnings today as well. Advanced Auto Parts is actually going to be releasing earnings today. Let's go ahead and pull up that chart now that we're over that news. AAP is your ticker symbol there. It's at $184 a share. And I think I think they did just recently go through a forward split. Let's go back out to the weekly. Yeah. So here's your weekly chart on Advanced Auto Parts. I actually think that Advanced Auto Parts has the ability to do quite well. And for a lot of the reasons that we had talked about yesterday, and I actually do want to revisit some of the things that we had talked about yesterday with Walmart and some of the other one at Home Depot that reported this morning as well. So before I get into this though, Ford PE on Advanced Auto Parts is at 14 times next year's earnings. So nice and cheap. Estimated earnings per share today are $3.34. $2.65 billion in revenue is expected. One upward revision to 20 downward. And I think that this is listen, analysts are like weathermen. They get things wrong all the time, as does your boy. I get things wrong all the time too. But we try to do the best we can with the information that we have. And the information that I have is that things are tightening up. People are tightening up their wallets. They're not buying as many new cars, which means that they're trying to keep their used cars or their old cars running. Advanced Auto Parts, I think, benefits from this. We actually saw that during the beginning of COVID right here, right? And this was actually a company that benefited from people not being able to buy cars because of supply demand issues, and uh, people weren't driving as much or what have you. So we saw this huge move of $68 at the bottom of COVID. It went all the way up to 238, and it was still basically in line as far as valuation was concerned there at 238. Now it's on the cheap side, sitting at 184.18 right now. It looks like that's about where it's going to close. I think they have the opportunity to actually make some pretty strong moves. Why? Because we're seeing that with Walmart. High income individuals are now shopping more at Walmart. And we just talked about this yesterday. Remember when I had mentioned that, if we're entering into some sort of time of recession, or people are worried about their pocketbook and tightening up their budgets, that they're going to move towards companies, they're going to move to stores that have cheaper products. And actually, we're seeing more high net worth individuals or higher income individuals shop for groceries at Walmart. This is according to Walmart's earnings report today. They looks like they did pretty darn good. And Target could be on the next one to actually make this move as well. But Advanced Auto Parts, in my opinion, kind of fits this same type of narrative. I think that when you look at times of recession, then you look at companies that have pricing power, right? Like the grocery stores and that sort of thing, which Walmart does kind of fit that bill a little bit. And then companies like Advanced Auto Parts, where people are looking to keep their current cars rolling rather than going out and buying a new one. Walmart came in yesterday, or this morning, sorry, and crushed earnings. They came in at $1.50. They beat by 18 cents. Revenue came in at $152.8 billion. That beats by $6 billion. They beat revenue by $6 billion. Can you even imagine that kind of number? Beating by $6 billion in the quarter. That's an 8% increase. I'm sorry, it's almost a 9% increase year over year. Walmart came in, comp sales grew 8.2% and 17.4% on a 2-year stack. E-commerce growth was 16%, 24% on a 2-year stack. This is really good numbers. And this is after they had one of the worst quarters and stock performances since 1984, Black Monday, if you guys recall. So that is your Walmart story. This isn't a surprise to me. The stock is up 6% as a result. And I think that Advanced Auto Parts could have a similar move based off of that fundamental analysis. Now, looking at the charts, I think that Advanced Auto Parts certainly has come down quite a bit in recent weeks. This is your weekly chart. It is pretty much in a downtrend. We could see that buck here based off of whatever we see on those earnings. And I think that that's potentially what takes place. Let me zoom out a little bit more. And I think we talked about Advanced Auto Parts briefly yesterday, but looking at this, 154 seems to be kind of that bottom that we had seen back in September, on September 30th, very end of September. And, we'll see. This is your weekly chart coming back out to the daily. It's had a pretty damn good move since the end of September. Not a whole lot of volume going on there, but nevertheless, it's a really great company, a really good performing stock for the most part. I want to react to this one, but then I also want to give you guys some projections for tomorrow as well. Before I do that, make sure you guys hit that like button, hit subscribe if you're visiting for the first time. I certainly would appreciate it. And make sure you're hitting that notification bell as well. I'll be live tomorrow at 3:45 p.m. Eastern time. We're going to be covering earnings tomorrow again, as always. And tomorrow, I think, is a bit of a bigger day than today. Today's a little bit more of a kind of boring day as far as earnings are concerned for the afternoon anyway. Tomorrow's earnings will be NVIDIA, Cisco, Sonos, Bath and Body Works, and a few others as well. So obviously NVIDIA being the big one that we'll be reacting to tomorrow. So you're not going to want to miss that. The market is officially closed. Today, this afternoon, the market closed at the S&P 500 closed up nearly 1%. 34 points. The Dow actually ended up moving down a little bit towards the end of the day, only closed up 57. NASDAQ actually ended up closing up around 1.5%. So overall, even though there was a little bit of drama this afternoon, it wasn't all that crazy, and ended up having a halfway decent day in the markets. So, are the Bruce? Yes, NVIDIA is reporting. So as we keep an eye on advanced auto parts, we will take a look at what's happening tomorrow. Tomorrow, before the market opens, is Target. And as you guys know, I just got done talking to you about Walmart. Target ended up having a bit of a sympathy move to Walmart's earnings, but doesn't mean that Target can't keep going up. It also doesn't mean that Target may not be facing its own issues. So one of the headwinds for Target has been its margins. The profit margins have been pretty thin, and that's going to be something that's going to be front and center for them. They're scheduled to announce earnings tomorrow before market open. Consensus estimate is around $2.18. That would actually represent a loss or a loss in growth of about 28% year over year. And consensus revenue estimate is 26.4 billion. That would be an increase of 3%. So if we see any kind of, if what we saw from Walmart is indicative of what we might see from Target tomorrow, they should crush those numbers. But Target is not Walmart. They are much different. And that could mean that maybe they don't do as well. I would be surprised if they didn't. They do a really good job at moving inventory, and that's been Target's problem. And Walmart's for that matter. The reason that we saw that huge move down back here was because of the inventory crisis that they had, right? Discretionary versus non-discretionary items. They kind of got that wrong based off of what they were seeing from consumers. And so they had excess inventory, which hurt their earnings. This time around, I think that they were able to kind of take care of that issue. And over the last 2 years, Target's beaten earnings and revenue estimates 75% of the time. I think that tomorrow they will beat those numbers. Over the last 3 months, earning estimates have seen 1 upward revision and 23 downward. I just don't see that panning out for anybody who was going short on Target right now. And I think that they're starting to work through some of their margin issues, as I had mentioned, after the inventory problem that they were experiencing. And this quarter could be that quarter that they ended up turning it around just in time for the holiday season. We already started to see some retailers out there making sales for, or making pushes for and promoting the holiday season already as early as October, which I think is just crazy. But hey, is what it is. Can we celebrate, or can we take part in Halloween and Thanksgiving first? I mean, Jesus Christ. Now we're starting to promote Christmas in September and October. It's crazy. So yeah, Carmike, we were just talking about that. Carmike just tuning in says only thing I see worth watching is Advanced Auto. Yes, so Advanced Auto Parts is reporting today. We'll take a look again and see if there's any movement there. Doesn't look like it just yet, but as soon as I do see something, I'll certainly check out the numbers and see where we're at. It's only up around 0.5% on pretty low volume here. So tomorrow, though, I just got done talking to you guys about Target. Now let's go ahead and take a look at Lowe's. So Home Depot came in this morning and actually did well on their earnings too. As I had mentioned, I thought they would, and they did, in fact, do quite well. Stock closed up 1.72%. They came in and let me give you the actual numbers for Home Depot. Let's see here. They reaffirmed their 2022 guidance. They beat earnings per share. It came in at $4.24. They beat that estimate by 13 cents. Revenue of $38.87 billion. That's a 5.6% year-over-year growth. They beat that by $1 billion. Comparable sales increased 4.3%, and comparable sales in the U.S. increased 4.5%. Quoting the CEO here, so we delivered another solid performance in the third quarter, driven by strength and project-related categories across the business. It's from the CEO. They reaffirmed their 2022 guidance. Lowe's also moved on this news. It's up 2%. I think that Lowe's actually does well this earnings season too. we will take a look at those expected earnings, which will be around $3.09, $23.16 billion in revenue, 18 upward revisions to 5 down. I think that the street's getting this one right. This is a good one to hang on to, in my opinion. Go back and take a look at the weekly chart and see how much Lowe's has come down. And, obviously the housing has slowed, but not enough, I don't think, to really damage Lowe's or Home Depot. And the forward PE, this is super affordable. It's a nice cheap stock. 15 times next year's earnings. I think Lowe's does just fine for tomorrow's earnings. Appreciate that, Carmike. Hit that thumbs up. We got about 139 of you guys chilling with me. Appreciate it. Don says, getting back to my Christmas comment, so this is the first year I'm actually okay with it. I almost put my tree up. Target, Presto says, Target's going to shoot up or go flat. If it's down, it's only because of the overall market. Yeah, I would agree with that. I think all of the bad news that Target could have coming for it, and I say that generally speaking, but I think a lot of the bad news for Target and even Walmart this morning, which is why Walmart did so well off of those earnings. You don't see 6% moves in Walmart all that often. It's really rare. We could see something similar from Target tomorrow if they smash earnings, because the stock has been so depressed from 2 quarters ago that I think that they actually have an opportunity to make a really strong move to the upside, similar to what Walmart did today. MMT has this trees up. Who's got your tree up already? Put it in the comments below. Who's got their Christmas tree up already? I should have made a poll about this. I didn't realize this was going to be becoming a topic of discussion. Put it in the comments. Who's already got the tree up? Or who's in my camp? Who's not putting the tree up until after Thanksgiving? Damn it. Frankie asks about TJX. That was going to be the next one that I got to. So TJX is going to be the next stock that makes that I'm talking about, that actually has earnings tomorrow pre-market. This is your weekly chart on TJX. This is your daily. Today I had a heck of a day. It was up 3%. This is your 5-minute chart on TJX. The estimated earnings per share is 80 cents, $12.3 billion in revenue, 2 upward revisions to 16 down. I think the analysts that have downward revisions on this are dead wrong. And here's why. I think, in my opinion, when you look at how some of the other major retailers, some of the more expensive retailers, we just heard from Walmart, right? Walmart is telling us that more high net worth individuals are shopping in their stores. So where are they going to go? It's not just going to stop at food, right? They're going to also look at areas like Marshall's and TJ Maxx. They get their inventories from the higher price stores such as Nordstrom and Gap and all of those, Ralph Lauren, and some of those. So I think my hunch is that TJX actually has one hell of a quarter, and they actually have pretty good guidance as well. As we all know, earnings per share for the quarter that they're reporting on isn't the end all be all. And in fact, guidance is what trumps everything. So if they come in with decent guidance, which I have a strong suspicion or sneaking suspicion that they will. So in my opinion, I think that TJX actually does pretty darn good for those reasons. Because if we are seeing consumers tighten up their pocketbooks, as I'd mentioned, this is why I'm looking at Advanced Auto Parts, and I think that they're going to do well. And this is why Walmart did well. It's going to continue to trickle down to some of these other discount type stores, such as a TJX. Let me know in the comments what you guys think about this. If I'm on to something here or not, would love to hear from you in the comments on thoughts about TJX as well, or just like this narrative of looking at companies that are discount stores. This also goes for like a Dollar General or Dollar Tree. I think that they might do well. Costco always crushes it, but I think that they're also going to continue on that train. But we'll love to hear from you guys. Also, I'm hopping back on this tree conversation. NASCAR All Out says you are a sick individual if you have your tree up before Thanksgiving. Bodie Beard has his tree up before Thanksgiving. Cinestyle is in my camp. Thank you. I don't. It's still sitting in storage. Tree has been up since Halloween, says Danny Alvarado. Danny, what is wrong with you? Jay Gonzalez says we call it a fall tree. No, you don't. A fall tree is a maple outside that just changes colors. It was a green tree and now it's an orange tree. Whatever. That's what a fall tree is. Not a goddamn Christmas tree. You know what goes up in the fall? Pumpkins. You put your pumpkins out. Frankie says, I also think TJX will smash it. Trading opportunities in my camp for the day. I appreciate that. It's freaking Christmas. Everyone goes shopping. Yes. Yeah. My lady put the tree up last Friday. Listen, you got to keep the house happy. I don't blame you. The new thing is putting a tree up in every room. Yeah, that's a no for me, dog. Two trees max. And I think the other one's just got to be a small one, like you put on a desk or something. Danny says blame my wife. Oh man, that's hilarious. Okay, J-Mo asking about Zim. Zim also reporting earnings tomorrow pre-market. Let's take a look at those expectations. I'm going to pull up the chart here so we can take a look at that. Here's your 5-minute chart on Zim. Didn't have a great day, but still ended the day in the green, but far lower than its highs of the day at 27.30, closed the day at 26.38. This stock has been very interesting. It's been a little bit all over the place. We'll come back out to the weekly chart. Obviously, hasn't been great since its peak back in March of this year. So what can we expect this time around? Well, earnings per share is expected to come in at $9.39, $3.16 billion in revenue. No upward revisions on this at all. Last time around, they had an absolutely horrible quarter and missed by a ton. They missed earnings by $300 million. They missed earnings by $2.18, only coming in at around 11.07. So the bar has been set a little bit lower this time for them. And so it'll be interesting to see if they actually hop over it. Now, from a forward PE standpoint, it is absolutely, positively dirt cheap at 60.6 times next year's earnings. That is ridiculously cheap, in my opinion. But there are growth issues as far as that concerns, as far as that's concerned. And so that is certainly going to be something that we want to make sure that we're keeping an eye on. This is, again, your weekly chart on Zim. Can they overcome this? I'm not sure. I think that this is one of those situations where if you're holding Zim, and again, this is my opinion, not financial advice, but if you are holding a Zim, and if it were me holding Zim, I would say continue to just hold. I don't think that selling here before earnings makes a ton of sense, but I also don't think that buying before earnings makes a lot of sense either. I think that if you're just a holder of Zim, in my opinion, you just continue to hold and kind of see what happens afterwards and make those decisions after earnings. One way or the other. One way or the other is what I would do. I'm not the Grinch. I'm not the Grinch. I love Christmas, but I love Christmas at Christmas time. That doesn't make me the Grinch. Snookeroo says I'm a one tree man. Also, hey, are you a real tree person or are you a fake tree person? That's probably the next question we should ask. J-Mo says the tree goes up on the first showing of Die Hard on TBS. That's when Christmas starts. When does that happen? Also, Die Hard is a Christmas movie. Don't at me. We can get into so many Christmas debates. Also, why is it always like Christmas debates? If you're Jewish out there, I would love to hear from you on this. Like, are there Hanukkah? Like, is there do's and don'ts about Hanukkah as well? Like, I can't imagine it's just a Christmas thing. What's the controversy over Hanukkah for those of you who celebrate Hanukkah? Brad isn't a Grinch, he's a Dutch bro. Yeah. Uh, Jim Lee says, I wear a real tree when I go hunting. Sir says 100% real tree. It's the only way to do it. That's how we grew up, man. That's how I grew up. Real tree. Here's the thing. I've like evolved into a fake tree person, and I kind of feel bad about it. Because we grew up only going for real trees. But see, my family, I've been scarred because it's like we had to be out for hours looking for the perfect real tree. And so now I'm like, I don't want to spend hours out in the cold finding a real tree. The tree that I have looks perfect every time I pull it out of the box. It's probably because I'm a lazy MFer. But that's my mentality right now with the trees. I might go back to a real tree. We'll see, but it always makes a mess. Then people make the argument, yeah, but it smells like Christmas when you go get a real tree. I don't know. Real tree and after Thanksgiving says straight. Yeah, well, you have to. If you're a real tree person, you almost kind of have to do it after Thanksgiving because if you do it before, shit's going to dry out. The check back in. I went way off course. I'm so sorry, guys. I went crazy on that one. I don't think this conversation's anywhere near over. No real movement on advanced auto parts just yet. That's the only thing that we're reacting to right now. Just got done going over, if you guys are just tuning in, just got done going over Home Depot and Walmart's earnings after we made our predictions yesterday, and then kind of gave my thoughts on what Lowe's, Zim, TJX, and Target's going to do tomorrow before the open. If you guys are just tuning in as well and are new to the channel, I hope that you guys would consider hitting that subscribe button. I certainly would appreciate it because tomorrow we're also going to be reacting to earnings that are, and we got a big day for those of you who are NVIDIA fans. NVIDIA is going to be reporting earnings tomorrow after hours, along with Cisco, Sonos, Bath and Body Works, among many others. So make sure you guys are checking that out. And hit that subscribe button. Tune back in tomorrow at 3:45 p.m. Eastern time, and we'll cover that. Not anywhere near done this stream. As soon as those advanced auto parts earnings come out, we'll certainly react to those. Real trees are a hassle. I don't blame you. They are a hassle, man. They are. They are. They're a pain in the ass. They are nice, though. It is nice to have a real tree, but it's a pain in the ass. Oh, first showing of Die Hard is November 28th. Wait until after 11 so they don't edit out the rest of the Yippee-ki-yay line. Do they give you the uncensored version after 11? That's like watching Christmas Vacation, right? Like trying to watch Christmas Vacation on TV is pointless because like to edit out half the movie. You got to watch the unedited movie. Don says, you know what smells like Christmas? A pre-lit tree and a fucking candle. I was going to say that, and then, but you took the words right out of my mouth. Fake tree, no less than 1,100 lights and a remote. I'm glad that you're paying that electric bill and not me. Okay. Are you a person who leaves their lights on year round? Definitely not me. No. No. Ivan Broski, are we doing shit or legit today? Let's do it. Why not? We got about 10 minutes, I think, before Advanced Auto Parts is going to be releasing their earnings. So in the meantime, since I've covered everything that I wanted to cover, let's do it. Shit or legit? Let's do it. Shit or legit, and your favorite ticker in the chat, guys. SOL and your ticker in the chat, and I'll determine whether or not I think that your stock is shit or legit as we await these Advanced Auto Parts earnings. So thank you, Ivan Broski, for asking. We can certainly do that. Shitter's full. Yes, it is. Oh, man. Oh, this is a good question. What's the next crypto company to fall next after BlockFi? You know, I don't know the answer to that question off the top of my head, but you know where you can find that answer tomorrow at DCTV. If you guys haven't checked out DCTV, I would encourage you to check that out. That is the show that I'm on in the mornings with my amazing team of crypto nerds, as well as Don from the Don Fron Show. If you guys want to go check us out over at Decentralized TV, I would love to have you guys go and support us there. The link is there, right there in the chat. And would love to have you guys hang out with us Monday, Wednesday, Fridays when we go live to talk about everything crypto, but we're also putting out shorts and all kinds of other stuff all throughout the day, every day. So go check it out if you want to get your up-to-date crypto news over at Decentralized TV. DCTV is where it's at, baby. Oh, that's a good, yeah, crypto.com. That could be one. There's lots, there's some insolvency. I'm hearing about insolvency with crypto.com as well. That could be a next one for sure. Don says, I do give my tree away every year, not having that in my garage. You buy a brand new fake tree every year? Fuck is wrong with you, man? Oh my God. SBLK asks, what is this? Starbuck Carriers Corp. You guys come up with some of the craziest, weird stuff. I love it, by the way, because like it gets me familiar with stocks I've never heard of before. I'm not knocking it. Starbuck Carriers. This is what did Frank bring this up? Frankie, there we go. Frankie brought this up. Let's go ahead and look up SBLK. SBLK. Let me give you guys the chart here. There's your chart for SBLK. And let's see. Oh, they have earnings today? Are those earnings today or are they tomorrow? Let's see here. Estimated earnings per share is 136 or $1.36, 2.74 million bucks. So it's a pretty tiny company. They haven't been doing too bad over the last 52 weeks. They're up around 6% over the last 52 weeks. Year to date, though, they're down 14%. It looks to me that the consensus is that dividends are expected to be cut on this. 4 Ps at 3 times next year's earnings. So it's actually not bad. Growth is actually pretty decent too, but a dividend cut was surely crushed the stock. But if they have a good quarter, then that might not be the case. Let's see here. What is Starbuck? It's a shipping company, engages in ocean transportation of dry bulk cargoes worldwide. So another shipping company. I'm going to go and say that this is probably a little bit too risky and say that it's shit at this point. If there's a lot of risk involved with cutting dividends, that stock is not going to do well at all. So be careful with that one. I'm going to say that it's shit. Shit or legit on DWAC, it's shit. Here's the thing. Listen, I know that everybody wants to be on the Trump train and that they think that Trump is going to do good with DWAC. But the fact of the matter is he probably doesn't have a whole lot to do with it. And aside from all of it, aside from the political affiliation with this, has anybody seen what Elon's up to with Twitter? What the fuck? That guy's going absolutely insane on Twitter, and he's going to be a dog in the social media platform space, like an absolute dog. He's going to crush. Who's the next highest social media platform from Twitter? IG maybe. Listen, Elon Musk is going to absolutely crush Twitter, and it ain't going to happen tomorrow. It ain't going to happen next week. But mark these words. Twitter is going to be the biggest social media platform in the world, full stop. I don't know when, but it will be. And it's because that man, Elon, knows a thing or two about the internet. Full stop. So for those reasons, DWAC is shit. Not because of anything else. Just because DWAC is way too late to the game and Elon's about to take the world by force. And social media platform. Social media space, I should say. That's just my 2 cents. Brandon chiming in says Brad has a big team of nerds. I sure do. They're amazing people. All right. Actually, I can pin DCTV now. Yeah, let's pin DCTV. So DCTV officially pinned. Go check us out there. Go subscribe if you're not already. I see 49 likes, about 125 of you guys watching. That is weak sauce. Hit that thumbs up. I certainly would appreciate it. Shit or legit on Sava. Is it legit yet? That must mean that I reacted to this and said it was shit before. Cassava Sciences Inc. Here's your daily chart on that. It's not pretty. Take a look at Sava. Cassava Sciences Incorporated. So what do they do? Cassava Sciences is a clinical stage biotechnology company, helps develop drugs for neurodegenerative diseases. Its lead therapeutic products candidate is simulfilam. I can't pronounce drugs like that. Anyways, it's a drug company, biotech. Usually doesn't do well. Over the last 52 weeks, it's down 33, almost 34% year to date. It's not performing all that great either. However, it is outperforming the S&P 500. It's down 16% year to date. They are yet listen, here's the thing about biotech companies. The stock is still losing money. The company's still losing money. A loss of 52 cents per share is expected. And I don't like it. The last time around, they did beat earnings. They came in at a loss of 51. They beat by 8 cents, which is okay. But here's the thing with companies, especially in biotech, that is losing money like this and don't really have a bunch of revenue to make up for those losses. We're in an environment where with the Fed raising rates, these types of companies are still super sensitive. And then biotech companies, if they don't have the revenue, if they don't have any revenue or they don't have enough revenue to make up for some of the losses, they have one option in most cases, and that's dilution. And I'm not going to do enough digging to really determine whether or not Sava is diluting, but let's just take a look real quick at the weekly chart, and I think that you probably will have your answer. It's made a decent move up from the bottom back in July, and it actually hasn't done too bad. But the fact of the matter is that they're still operating for a loss, and until they start to become profitable or have some crazy ass breakthrough in technology, I'm gonna have to say it's shit. At least for now. I'm not saying forever, but at least for now. SOL on Disney. Disney came in and had mixed reaction to earnings. It came down and retested this bottom. This is your weekly chart. Came down and retested this bottom at $95 a share. I think that Disney is legit. I think that risk reward wise, it's pretty damn good. The streaming side of their service is also still growing. They've had some struggles with the parks, mainly due to the shutdowns over in Shanghai. That certainly caused a lot of issues. Shanghai and China seem to be easing quite a bit up on the COVID situation. And so I think for those reasons that Disney is legit. It was always legit. It just, the stock never really reflected that, in my opinion. DWAC probably going to moon if Trump announces tonight. Probably not. I mean, I didn't even look at it. What's DWAC even doing? It ain't doing jack shit. The last 2 weeks, it's had a decent move, but I'm telling you, Twitter's going to squash this like a fucking bug. Just is. Let's check back in with Advanced Auto Parts, AAP. Still no movement on that. Here's your 5-minute chart. I think those earnings get released here quite 4:30 Eastern time, if I'm not mistaken. Okay. Don says DWAC is shit across the board as far as the stock goes. Yeah, it just is. I would love to watch your show, but you're cursing so much, kids walking around. Well, listen, I checked that this show isn't made for kids all the time. I just talk like I talk. If you don't like it, sorry. It's just how I am. The Don Fron channel is family friendly. Go check him out. It's at the Don Fron Show. He doesn't like to curse on YouTube. Sorry, it's just how I am. Okay. And I would love to like watch my mouth maybe a little bit more, but I can't. I've tried, and I need to be myself. All right, let's take a look at Advanced Auto Parts. Huge drop down. It's down 7.5%. Okay. Actually, not looking good. So, if you guys recall, I actually was expecting a better reaction out of Advanced Auto Parts. So, it looks like I might have missed the mark on this one. So, let's take a look here. See what those earnings are. So, expectations for Advanced Auto Parts was, let's see here. Earnings expectations were $3.34, $2.65 billion in revenue. So they came in at $2.6 billion in revenue. So they beat that number. They also, where is earnings per share? I wish they would just give it to you in the report, like front and center, instead of having me dig for it. So it looked like they beat the revenue numbers. So that's not the problem. Stock's down nearly 8% now at $169.26. 284 was the earnings per share. I believe that's a miss. Yes. Yeah. $3.34 was the expectation. They came in at 284. Revenue of 2.6 billion. So they beat on revenue, missed pretty badly on earnings per share. The stock's down 8.25%. Man, they also lowered guidance. So that is also probably the bigger reason why the stock is now down 9%. My goodness, the stock's getting crushed. There's your 5-minute chart. Wonder why they lowered guidance. Let's take a look and dig a little bit more into this. So yeah, there it is. They decreased 11.5%. Diluted earnings per share decreased 11.5% to 284 per share. Net cash provided by operating activities through the third quarter was 483 million. They did open 37 new stores and branch locations in the third quarter. That's actually not bad at all. Third quarter of 2022 net sales totaled 2.6 billion, a 0.8% increase compared with the third quarter of the prior year, primarily driven by strategic pricing and before the store opens. Comp store sales for the third quarter of 2022 decreased 0.7%. So the growth story here seems to be the problem. Gross profit margin decreased 44 basis points. This probably has a lot to do with inflation and commodity prices, I would imagine. Gross profit decreased 0.2% to 1.2 billion. Across adjusted gross profit increased 2.9%. So slowing of growth on the profitability side seems to be the issue. I mean, revenue they came out and beat, but it's profitability that seems to be hurting them, and it looks like it's still related to inflation and higher costs. I don't know, man. I think that this is still probably. Let's check out AutoZone. Is AutoZone reacting to this? It is. AutoZone's down 2% as well. AZO is that ticker symbol. Interesting. Snookeroo says, so that was a quick $100 I just lost. So there's your movement on AutoZone, and we'll go back in on Advanced Auto Parts. So you guys are just tuning in. Advanced Auto came in and beat on earnings per share, beat on revenue, but missed on earnings per share, and actually missed pretty badly. Profitability has been hit pretty hard. And so that is the story here. I think that's going to, and they ended up lowering guidance. I think that has a lot to do with higher costs, which, I had taken into account, but in my opinion, I still think this is probably going to be a one to look at, to take advantage of the overreaction here as the stock's down 8%. That's just my hunch. And again, the narrative that I was floating your way with Walmart and Target, I think still applies to something like an Advanced Auto or AutoZone. Let me know what you guys think about that, though. Is this an opportunity? Would love to hear from you guys on that. Just checking back in the comments. All right. Let's see here. All right. So a couple of other shitter legits. Let me see if I can cover one. Old Dominion. Old Dominion. So the transports have gone through it. And let me take a look at what this has been doing on the daily. This actually looks pretty good now. Huge move on the weekly chart, and it looks like it broke over resistance at 314. Old Dominion, I think is still cheap. Well, no, I'm sorry. I take that back. I don't think it was actually ever cheap fundamentally. I think it's just a safe haven where people go to park their money in times like these. Yeah, it's trading at 26 times next year's earnings. Um, Normally I would say this is shit only because it is overvalued. But man, I still like this story. It's outperforming the S&P 500. It is down only about 8% this year. Um, there are still some headwinds for this. Ah, all right. I got to go with my gut. I think it's shit for now, but it doesn't mean it's not a good company. That's my final thought on that. Don says zoom out on AutoZone for like a year. Let's take a look at AutoZone. Go back to the weekly chart. This is your weekly chart on AutoZone. It is absolutely stupid. This chart is stupid. This is a Chaos Crew favorite. AutoZone has been a Chaos Crew favorite since the start of COVID, really, and it's just been a ridiculous stock. Absolutely ridiculous. Year to date performance on this has been insane, and over the last 2 years, it's been insane. Stock this year is up 18.6%. Over the last year, it's up 30%. Sorry, 27%. Over the last 5 years, it's up 300%. AutoZone just keeps going up. It is dumb. It's so good. Melanie says, "Well, watch your fucking mouth. There are future cursors are running around." Thank you, Melanie. I appreciate that. Listen, this is YouTube. I'm not censored by the FCC. Just not how it works. If it broke that weekly trend, I'd be up, but probably not a bad dip for AutoZone. Yeah, I mean, it just keeps going. This is your weekly chart on AutoZone. It's just stupid. All right, guys, that's going to do it for today's show. Thanks so much for tuning in. I certainly appreciate it. Make sure you're hitting that subscribe button, that like button. And also, I didn't make one mention of it all stream today, but I certainly would appreciate it if you go check out the Chaos Crew. The link is in the description below. If you guys haven't checked it out, go to patreon.com/ownthechaos for $5 a month. You get a watch list from me on Stock Watch Sunday, as well as extra videos and posts and access to our Discord group. Like I said, it's an extra $5 a month. It really not a whole lot of risk to you, but it means the world to me and helps support the channel and everything I got going on here. So thanks so much for doing that. If you are part of the crew already, if not, please consider checking that out, guys. That's going to do it for me. Tomorrow we have Cisco's earnings as well as Nvidia and many others. So you're not going to want to miss that. Come back here tomorrow at 3:45 p.m. Eastern time. And see you all tomorrow. Enjoy the rest of your night. Bye.